The secret AI trade, how ERC-8004 changes everything for BMNR. But let's see what happened yesterday. The overall market heat map reveals a challenging session for crypto-linked stocks today. Coinbase is taking a significant hit, trading down over 6%, signaling bearish sentiment for direct crypto exposure. The hardware sector mirrors this weakness, with AMD crashing over 17%, a massive blow to the mining supply chain narrative. However, Nvidia remains an outlier, holding slightly green and decoupling from the trend. While broader financials remain mixed, the dedicated crypto trade is clearly under heavy pressure. And the crypto market is facing a significant downturn today, with a sea of red dominating the charts across almost every asset. Bitcoin is currently trading around 71,500, reflecting a nearly 26% drop year over year. Ethereum has taken a particularly hard hit, plummeting over 25% in just the last week. Interestingly, Binance Coin remains the only outlier, showing a marginal daily gain and standing as the only major asset in the green compared to last year. While volatility remains high with Ripple, Polkadot has suffered the steepest long-term decline, dropping over 67% annually, signaling a tough period for altcoin holders. We have good news for BitMine Immersion stock. Cathie Wood is aggressively doubling down on BitMine Immersion Technologies ticker BMNR, despite the heavy volatility shaking the crypto sector right now. The latest trade notification explicitly confirms that ARK purchased a massive block of 145,488 shares on February 3rd alone. And this was not just a one-off adjustment, but part of a sustained accumulation campaign that saw them buying even more millions worth of stock the very next day. This behavior signals an incredibly high conviction trade where ARK is stepping in to defend price levels, while retail investors are likely panic selling, creating a distinct divergence between smart money flows and market sentiment. To fund this play, ARK is actively liquidating huge positions in mature companies like DraftKings and Airbnb, effectively recycling capital from stable winners into what they perceive as a deeply undervalued asymmetric opportunity. The core thesis driving this is BitMine's unique position as a massive holder of Ethereum, because the company has effectively pivoted to become an Ethereum treasury proxy, holding roughly 3.5% of the entire circulating supply. This means ARK is essentially buying Ethereum at a discount with equity leverage and betting that the current crypto correction is merely a temporary setback before a major resurgence. While the optics look dangerous, as they are seemingly catching a falling knife, the sheer volume of this accumulation suggests that ARK's internal models are flashing a strong buy signal based on a projected rebound in Ethereum prices, meaning this trade is a direct leveraged bet that the crypto bottom is in and a violent squeeze to the upside is imminent. BMNR as Ethereum proxy we have ever seen for Ethereum network conviction. And the data is painting a picture of an impending supply shock that the market has not fully priced in yet, because right now there are over 4 million Ether sitting in the entry queue, just waiting to be locked up, while the exit queue is sitting at absolute zero. That is not a typo. Literally 0 Ether is pending to leave the staking contract, while millions are fighting to get in, which means investors are currently willing to wait over 70 days just to start earning yield. And that screams long-term conviction rather than short-term speculation. We have officially crossed the threshold where 30% of the entire Ethereum supply is staked, effectively removing it from liquid circulation. And when you combine this massive entry bottleneck with a zero exit rate, you are looking at a scenario where available supply on exchanges is being drained, while demand to lock up coins is skyrocketing. This is not just about staking rewards anymore. It is about a fundamental shift in the asset's scarcity mechanics, creating a setup where a third of the supply is effectively off the table, signaling that holders are buckling in for the long haul. And Ethereum has just established itself as the critical backbone for artificial intelligence with the launch of ERC-8004. This marks a monumental shift because AI agents require more than just intelligence. They need a reliable way to coordinate and transact at scale. Developed with giants like Google, Coinbase, and MetaMask, this standard provides the blueprint for a machine-to-machine economy. It allows AI agents to autonomously discover other agents with specific skills, hire them, and settle payments on-chain without human intervention. Think of it as a decentralized marketplace where bots act as both employers and employees. The standard solves three major hurdles: enabling agent discovery so bots can find the right tools, facilitating instant crypto payments so value moves as fast as data, and ensuring verifiable results so work is proven before funds are released. This transforms Ethereum into the trust layer for AI, moving us from isolated chatbots to a collaborative, automated global workforce. Let's move on technicals green day. Strategy. After witnessing a sharp decline of over 9% yesterday to close at 20.3, we are now positioning ourselves for a potential green day reversal strategy, but this trade requires strict patience and confirmation. The stock is currently oversold and found a temporary floor near 19.90, but the trend remains bearish until proven otherwise, so we do not buy blindly at the open. The absolute key level to watch is the volume-weighted average price, or VWAP, sitting at 20.76, which acts as the line in the sand between buyer and seller control. Our strategy is to wait for the price to break and hold above 20.80, which would confirm that buyers are stepping back in to defend the valuation and fill the liquidity gap above. Before executing, you must check the price action on Ethereum, because a rally in the crypto market is the necessary catalyst to fuel this move. If we get that confirmation, our first profit target is the psychological level of 21.00, followed by a secondary push toward the intraday moving average at 21.74. Risk management is paramount, so your protective stop loss must be placed strictly below yesterday's low of 19.90 to prevent catching a falling knife if the downtrend resumes. Stay disciplined, wait for the VWAP reclaim, and let the market prove strength before you commit capital. But market never go in straight line. Let's talk about red day strategy. We are tracking a high probability trend continuation setup after the stock suffered a brutal 9% drop to close at 2030. The technical damage is significant, with the price trading firmly below the critical volume-weighted average price of 2076, which now acts as our massive overhead resistance layer. For this bearish strategy, we need to see sellers defending that VWAP level aggressively. So if we see a morning pop into the 2070 zone that gets rejected, that is your trigger to initiate a short position. Our confirmation level is the previous day's low at 1990. And if that support cracks on high volume, there is zero structural support remaining, which exposes a fast move down to our first target of 1950 and potentially an extension to 19 flat. Keep a close eye on Ethereum as a leading indicator, because if the crypto market remains sluggish, BMNR will likely amplify that weakness with high beta volatility. So do not try to catch a falling knife today by betting on a reversal unless we reclaim the VWAP. Instead, we align with the dominant momentum and short the rips while protecting our capital. In my opinion, a stark divergence defines the market. While retail panic sells amid a crypto and hardware crash, ARK Invest is aggressively buying BMNR, betting on a leveraged Ethereum recovery. This smart money move relies on a looming ETH supply shock and new AI utility. However, the technicals remain fragile. BMNR sits below the critical 20.76 VWAP. Until buyers reclaim that level, the trend favors sellers, making this a dangerous high-stakes battle between institutional conviction and bearish momentum.